I feel like I need some kind of animal on my wall, though. I was going to wear a hat, wear a cowboy hat today, just to support. Yeah. So, yeah.
It'd be really good, Bobby, if you wanted to kind of give a backdrop on Jayson, and I think it'd be cool after that if to let Jayson kind of give his backdrop. I think it'd be great even for me to just hear how you look at the bank, right?
Sure.
Kind of get your vision would be good, and we'll go from there.
Yeah, sounds good, man. So yeah, you nailed it, Tanner. Jayson was actually a customer of ours at Malazai, which is now Finastra, Seattle Bank. You guys are probably one of our most innovative banks we had. So that's kind of how we all got connected. And then you guys, over the years, we've just been helping you guys out with technology decisions, stuff here and there. And then, of course, you guys came to Roundup a couple of years ago, you and your CEO, John Blizzard. And then, funny enough, you guys are finally officially now a customer after buying our FinTech Analytics database. So appreciate that, and glad to have you on here.
So, so Seattle Bank, did you want to know a little bit about us?
I'd love to hear it.
Okay. Yeah. So originally one of the bigger mortgage companies, banks in the country at one time, during the downturn, had a bunch of bad things happen, got recapitalized, some new management in there, and then kind of did a change in direction. So got rid of most of the mortgage side of the business, turned into a high net worth, ultra high net worth commercial type bank. So we cater to that specific demographic right now in Seattle. But basically, the CEO that came there, John Blizzard, is kind of tech forward, and we've got a lot of new shareholders that when they capitalize the bank, most of them have been early investors in a lot of the big tech companies, Amazon, Zillow, Expedia, those type of things. And so we've got some board members and shareholders that are really on board with moving forward with more of a fintech strategy. So for us as a bank, we spent the last few years, like Bobby mentioned, kind of met him through Malazai. That was kind of the first thing that we did was we wanted to change our digital experience so that we could offer a better solution to our clients and customers, something that we could customize. At the time, Malazai was allowing us to customize things and do some innovative things that some of the other providers weren't doing at the time. And then along those lines, once we kind of got that up and running, about a year later, they were bought by Finastra. So we were also doing looking at our core at the time. So did a change in cores, and so we're actually on the Finastra core now. So we're kind of all under one roof there. As far as Finastra, we've kind of bought into most of their products and services, and we've got a pretty strong strategy with them. As you know, we were part of the Googleplex project initially there, one of the 11 banks in the country that were part of that. And, unfortunately that didn't work out. We were pretty excited about that, but that did get us kind of moving in the direction of consumer. We had been focused on a certain niche type banking originally, but that did open our eyes to bigger opportunities, instead of local opportunities, maybe more regional or national in general. And so moving from there, that kind of pushed us into looking at, with our new core, with their open platform and their open banking strategy. We've really, through the Google project, got to know them very well, having multiple calls weekly with the teams there that were working on that project. They did some really, really great work, and we're all ready to go. And unfortunately, before the plug got pulled, but basically that really tightened our relationship, and now we're pretty strong with them, and we're looking at more of a banking as a service strategy right now. So that's kind of the play right now, is that we're going to go to market and hopefully get some fintechs out there to hop on board and be the back end for them, and maybe some brands and some other opportunities out there. So we've got quite a few irons in the fire right now in that direction. So I'm pretty excited about that.
When you're talking about the Google piece of this, it got my attention, and Bobby and I talk about this a lot. We're obviously around here not afraid to take the occasional risk, right? And be a little forward on things. And it doesn't always work out, but what we found is even when we lose at things, you kind of limp that into a win. And I think it's a cool story, right? This idea that, we take chances on things, and even if they don't work out, then it's going to work out in some other way. That's a really cool thing. I think that, a lot of banking doesn't exactly have that theme, but a lot of technology companies do.
Yeah, absolutely. I mean, we learned a lot through that process for sure. And like I say, it really strengthened our partnership. And there was some stuff that that our core provider had to build to support that project, that I don't think any core in the country has right now outside of ones that have built their own. So, some stuff like real-time event alerting at the core level, as opposed to getting stuff from the card vendor, things like that. So there's some really neat stuff that came out of it that I think we're going to be able to repurpose for some of these other, BaaS opportunities that we look forward to here in the future. Yeah.
That's a big topic, man, that I'm almost certain nobody's covered. There's very few, it's a very small group of people that sort of live in banking as a service all day, every day, and everybody else dabbles, but you rarely get into the depth, the real tactical depth. I think the core is a good one you just brought up. I mean, shoot, we've built over the years in different lives. Bobby and I at Malazai certainly built probably 35, 40 core interfaces over there, and every one of them's different. And most of your bank instances are different. You're rebuilding 70% of it every time for each customer, and to your point, Jayson, you get different stuff on different cores that's available. And if you think from a banking as a service perspective, what you're going to be able to extend downstream to that fintech, right, is very, you're reliant, right, on that upstream. So that's a good thought process. I think also sitting in your shoes to be able to say, that you're confident that you got the parts and pieces, and also some things that you think are your core puts you in a spot where now it's a competitive advantage for you.
Yep.
That's pretty cool.
Yeah, exactly. I mean, we feel very strongly about that, especially through that project. It really, really solidified that we made the right decision with the provider that we chose. So we were pretty excited about that. I know a lot of the other the core vendors out there now are kind of coming to the table now with more of an open banking solution and starting to spin off their sidecar type digital platforms and that kind of stuff, which is great. I'm glad they're doing it. But for us, the one that we chose, they were already doing this in Europe. They had to adhere to the PSD2 and some of that stuff. So they were already building that open banking platform. And so we just felt that they were a little bit ahead of the curve. And, for us, they had nothing to do, but, in the North American market anyway, but go up, they're playing offense, not defense. And for us, that's a big deal too.
Bobby and I, obviously from the data perspective, we look a lot of times at market share. Right. And so is it a tried and true proven solution? When you think about things like integrations, it's pretty important. But I like the idea of maybe they've only got a handful, but they've got that upward trajectory and they're playing offense.
Yep.
That's pretty cool.
Yeah, we definitely like the what they're building out there for the fintechs too. I mean, they've built that marketplace, which you guys know, a marketplace is a tough business, right? To get traction on that. And I think that they've got about 150 vendors out there right now. Not all of them are live. They're in various states, of course. But, I think they're starting to get some traction. And when that happens, when you're talking about implementations in the past, that would, take a lot of money, usually 6 to 9 months minimum. And that's with the vendor that might already been connected to that core 15 other times. Because like you say, 70% of that interface is something slightly different because that particular FI decided to set up their core a little bit different, right?
A little bit.
And so yeah, so we're think we're going to be able to take advantage of that pretty well as far as that marketplace and offering different products and services down the road. Okay. And that's really what kind of pushed us to choose a different core provider, is that we were kind of locked in with what we wanted to do with our existing client base. There's features and functionalities that we wanted to bring to market, and we're a small bank, and we couldn't get the attention of the higher ups, and so we feel we've got that where we're at now. So we're pretty feeling pretty good.
That's cool, man. I like the marketplace concept, the very open concept that's evolving. A number of years ago, they kind of evolved Fusion Fabric out of a lot of the components that they acquired from Malazai, right? So
all the stuff that you guys built,
we had a little bit of insight in there, right? And I remember at the time, confiding in Bobby and others that the likelihood of how the direction that this was going, Finastra was probably firing the first shot in a war that they couldn't win. Right. To your point of size and market, but from that's why it grabbed me saying the concept of taking the offense. Right. And at the very least, they're forcing the others. I can tell you what the other core strategies and their roadmaps look like right now. And if you saw from Jack, actually talked to my buddy Pete over there, and they're doing really good at a very similar path. And here's something I think everybody misses from an integration or market perspective. I need backend integration to get to the core. Sure. And that's a mess and it's expensive and there's all kinds of wonderful hidden fees and partnerships. And, now you're a cool VIP partner, but we had to charge you this, fun stuff to deal with, a lot of commercial problems as well as technology problems. That's just getting backend integration so we can get to the data, which to the point is 70% different every time still. But what about the front end problem, right? I still need to be able to expose things in the digital solution. And that's something that Jack has done with Banno that I think is going to be interesting. They've basically got, we can call them widgets, iframes, plugins, what have you. But they have the ability that you can hit JExchange on the back end and then build the plugin in an iframe or widget into their Banno front end. And I think that's interesting. It's finally the first thing that I've seen that is a full one-stop shop for a third party to show up and have something that's reasonably open, reasonably inexpensive, that gets you the back end and the front end. And you can actually finally touch customers, right, in one swoop. I'm not saying it's all the way there. I've given them some big shout out, but it's the first thing I've seen that is a fully comprehensive, it's all the way, right? Yeah. Everything's got its challenges, but I'm hopeful that it's the first thing that we're all going to see. That's the first breath of the new future. It's really cool.
That's awesome, because that's been the challenge for us. And when we originally looked at Malazai, one of the reasons we chose them is because we wanted to create a sidebar where we could put our own elements in there, and that was one of the biggest sticking points that we had, is that, hey, we have a unique clientele. We want to be able to provide a widget for their PFN. We want to be able to provide, a couple widgets for their account reps and who those people are, so they can easily just click a button and make a call to those people. And we wanted to be able to ingest future fintech type stuff into that sidebar or that rail. So it's kind of interesting that you say that about Banno, but it sounds like it's very similar in what they're trying to do there, where they can just kind of plug those things in through the iframe, which is very cool. But yeah, it's definitely good to see that the industry is kind of moving that direction. And at the end of the day, it's good for the consumer, or it will be most likely. So that's great.
So, right. And I think the fintech side is interesting. Bobby, you've seen some of that, right? With the fintech side, we have a lot of fintechs that show up and they've gone direct to consumer and struggled. And if you think about how that world looks, they kind of have to you're going to build a fintech twice when you get done with this. You're going to go and you don't have a sponsor bank and you look everywhere. And I finally find Jayson and he's like, give me a business plan, or at least, lie to me with some slides, or you can't even show me a beta, right? And he's like, crap. So he goes back and actually builds a junky version, right? And shows, I got a business plan, I look good enough, and I got a little bit of funding. And so Jayson's like, all right, we'll sponsor you. Now he takes his funding to go actually build something and actually connect it. And right. So it's kind of this double tap that they have to do. And it's a lot of those same problems. They still got to get integrations all over the place. Okay. And once they've raised the gazillion dollars that you would need to go direct to consumer, they realize that the banks are a wonderful distribution channel to get to the consumers, right? But we don't have the middleware, the infrastructure, right? As nice and clean as they all would like. It doesn't look like Europe here. There's no wonderful open API, which is kind of good and interesting. I think for all of us, there's a little bit of competitive advantage to understanding how that ecosystem works, right? We have the data map of that, right? You guys provide, access via core systems and things, right, for those fintechs, and really rent a charter, if you will. That's pretty cool. It's an interesting ecosystem. But Bobby, I was going to ask you, the fintech side and the integration piece, you seen the same thing that I see there? That sort of.
Oh yeah. Same thing, Tanner. And it's kind of cool to see all the new, call them BaaS infrastructure vendors out there, like the Treasury Primes, Bonds, Unit, Move. So I agree, man. It's not quite like Europe yet, but it does make things interesting from a competitive lens.
Yeah, we went to a DevCon conference a few months back over in Jordan Wright was there, and it was put on by Move, and so a Banno, one of the original Bannos, right, Wade.
Yeah.
So anyway, yeah. So we went to that, and one of the interesting takeaways was exactly kind of like what you're saying. Is almost a 3-step process if you kind of look at it this way. But basically, I can't remember if it was Chime or who it was that was talking to the fintechs there. So we were probably one of 3 banks at this conference, because it was really a FinTech DevCon. So it was really for developers. But one of the comments that kind of came out of that was, if you have the time and you have the money, go out and partner with the bank directly right out of the chute. because otherwise what you're going to do is you're going to go out and you partner with like a treasury prime or a bond, or a unit, whoever that is, so you can get to market fast and start getting those customers. But at the end of the day, a year or two down the path, you're going to want to connect directly to that back end bank for a multitude of reasons, and a lot of that probably being cost. But at the end of the day, that's kind of what they said is if you had the time and the money, you should do it right up on the outset versus going through that other middle step. But yeah, that's kind of, we're taking kind of that approach. So we've kind of got a three-tier approach for our BaaS right now, which is one, we want to actually partner directly with the units and bonds and treasury primes and maybe be a back-end partner for them. We want to be a partner for any of the brands out there, some of the larger brands, whoever that might be, provide them some, embedded finance, so there's of course the embedded finance side and the banking as a service side. And that's kind of where we're kind of, putting our stake in the ground right now.
I like it. Bobby, we should work on this. We should just build like, what is the FinTech life cycle, to visualize it for people. I think you nailed that's a really complicated first part, but it gets even more interesting of what we're starting to see with the bigger guys. A lot of them, once they hit that second stage of the life cycle, now they need a core and they want to be direct with a card processor, right? And before you know it, they've outgrown a sponsor banking relationship and they're at, one of the major big guys that is very dedicated and focused. And then you're going to find some of their founders become investors and board members of some little bank in nowhere. And then shockingly, somebody acquires that bank and then, right? So it's interesting, but Bobby and I have been hammering this point that this is the new de novo cycle, I believe. Mm-hmm. It is a clunky, nasty life cycle to get there, but eventually, right? That's kind of how things are ending up. The problem is we're destroying charters, not creating new ones. I wish we were creating new charters. I think, Jayson, to your point, not thinking in a local technology focus, right? You can have a national footprint from a technology perspective. And I think it's similar to us. We've got on the family side, obviously farm and ranch for hundreds of years. And then we do a little FinTech on the other side, right? I think it's cool.
There's just a lot of opportunity, and that's what I'd say. I think your target audience here is community FIs, and I think the treasury primes and the bonds and units, they serve a real purpose for those FinTechs that are wanting to get to market fast, which is great. But there's huge opportunities, I think, for some of the community FIs to get into this space. Part of the reason that that's there is because we're all under Durbin. A lot of these FinTechs are making their money off the interchange, right? So as long as you're under 10 billion, they want to partner with you, because that cuts their income in half once they cross that threshold, pretty much. So I just think there's a lot of opportunities out there. For us, one of the bigger challenges probably in this whole thing, is when we become a program manager and you're talking about the regulatory and compliance burden, that's a real thing. And finding those type of key resources is pretty difficult in today's market. So we're kind of having a challenge, hiring for, this strategy, just because it's a tough market out there right now for hiring. So that's a big challenge. And, kind of to your point too, the de novos, you are seeing FinTechs come out. A lot of them are pulling back those applications after they realize what they're really signing up for. Or they're going out and just buying a bank, or the banks are buying FinTechs now. I mean, it's just everywhere, right? It's happening across the board. But I do think that, you're going to just see more and more of that. You're going to see some consolidation, and unfortunately, in the space, I think you're going to see some of these neos and challengers maybe in the next couple of years also, maybe pulling back and having to consolidate as well. So it's going to be interesting here the next year or two, I think, for sure.
I'm thinking the same thing, man. Look, if I'm looking at sponsored banking as a service, however you want to put it, for community banks, the 75 are the most profitable 75 by 1,000 miles. I mean, it's unbelievable, right? I think we'll see my guess is it's probably 200, 250 institutions instead of 75, 18 months from now. I mean, just 1,000 miles an hour. We're getting, I don't know, a number of calls that I take each week from somebody I didn't know that's a bank, which is not a huge list, right? And it's, hey, I heard you guys can help us piece this together, right? And so there's a ton of interest. We'll see, right? I think people will pick up parts and pieces. The other thing that nobody's really hit on is the crypto space. Let's say specifically, I'm less into the asset and currency side of the conversation, more into the technology and the blockchain side. That is just absolutely exploding. I mean, 1,000 miles an hour in super positive ways, but it's the Wild West as much as FinTech, the other side has been. I think all of this is about to be a perfect storm, right? And I think the big takeaway is for everybody that's not, I don't know if any of us feels like we're as educated as we could be, right? And we're sitting here talking because we're the supposed experts. That's how complicated it is, right? Oh my gosh. But it's all opportunity and excitement. I think that's the common denominator that you see from people is everybody's like, oh my gosh, there's so much fun stuff to be doing. And I think if you don't feel that way, then you're just not participating with the right groups of people,
Yeah, this is the most excited I've been in my entire career. So and I've been in banking finance for about 20 years now. So this is the most fun I've had that whole time. So I'm pretty excited about what's going on in the industry. For sure. And then, kind of your point, the crypto, more the blockchain, I think there's going to be a lot of advancements in like smart contracts and all those type of things. There's going to be some really neat stuff that come out.
Can I ask you? I keep calling it smart APIs because I think what we've all built is dumb APIs. And if you look at like a FinTech company, here's all of these APIs, you can build calls that can get you regulatorily in trouble. With a smart contract or a smart API, you could kind of control that. Does that make sense to you?
I think it makes sense. Yeah. I mean, yeah, I don't know why.
It's like justifying the workflow and keeping them on track. So we don't have to, worry about them as much.
Yeah.
I think that's where things are heading.
And when you say that, do you mean like I'm only going to open up the APIs that I want you to use, or what do you kind of
think of it this way? I'm not going to let you open an account or fund an account until you've brought me a compliant driver's license image,
Sure.
Right? Or I've done OFAC. The order of operations in banking is often the key part of compliance. And a FinTech guy shows up and they know a lot about building, but they don't know the regulatory. And so we could smart contract our way into that order of operations, kind of give them a LIFO, FIFO, so they couldn't harm themselves. Does that make sense?
Yeah, it makes total sense. I totally agree with it. But I think that creates a little more friction than some of these fintechs really want. I mean, you're looking at the BNPL space right now, and they're starting to take their losses now, right? And you're looking at, some of the bigger neos and challengers that are now having their cards denied because of the fraud that merchants are receiving. So it definitely, I think that would be awesome to build something like that. However, whether or not they want that friction in their experience, that's how they're onboarding 1 million customers a year, is because it's frictionless, right? Well, there's a reason why banks have friction in their process.
And I think all this you have to wrap this conversation up with the funding in the VC market. Yeah. Largest dollars we've ever seen. I don't know, like 91 years in a row, it feels like, right? Just every year is like record breaking. And so, I mean, you got to look at it and say, you have it's just not a real market. The lemonade stand doesn't work. Of course, especially compared with somebody running a charter that's doing things the right, compliant, frictioned way, it makes a lot of sense. But it's funny to see that come full circle, right? And now seeing so many banks that are doing awesome, not just from the innovation and cool technology side, but awesome from the financial side of actually supporting these guys and making them more compliant. It's just a really cool melting pot that's coming together.
Yeah, it is for sure. And, there's definitely some fintechs out there providing some of those services on the front end, like Alloy and I think Unit 21 and some others. They're doing some really good stuff for those fintechs on the front side where the banks don't actually have the purview into the onboarding process. So, and I think continue to strengthen that. The other thing is data, right? At the end of the day, they have, a Chime has 3 years worth of client data. I mean, that's what they're basing their fraud and some of the other stuff on. I'm sure they're pulling in outside resources too, but as far as data elements, but that's the other thing. Banks have decades of data to go off of and to pull from and to model off of, whereas some of these fintechs just don't have that yet, unless they can get access to a database or a sandbox or something that has some of that in there. So I think that's some of the challenge too, is getting access to what they need to model with.
Give you final thoughts, man.
The opportunities are just immense. I mean, there's plenty to go around. At least that's the way I feel, whether that's brands or partnering with fintechs or just being a back end bank. I mean, there's so many opportunities out there to kind of, enhance your banking model the way it is today and add some additional, fee income or whatever that other revenue looks like. So I think it's a huge opportunity.
That was awesome, man. Let's end it there, man. That is a great topic. That there's huge opportunities all over the place. Same thing we're seeing. The data is showing us, and then everybody piling in, and the Wild West is soon coming to a close. But the pioneers are coming, man. This is a cool time.
Yeah, it is for sure.
Great talking with you guys. Love you both. I'll see you there.
You too, man.
All right.
Take care.